What is going on? Welcome back to Trending Stocks. Today we're going to talk to you on SoFi. Pretty interesting day. I want to go over some of the current data points, break it down on what truly happened, and go over everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So SoFi did go down 2.15% and a fair amount of volume. So 38.1 million shares were traded. 44 is the average. And so when it comes down to the volume today, it was kind of positive because you do see a lot less algorithmic trading versus the last several weeks, I guess, with SoFi, and you get a lot more manual buying as what you can kind of see right here. So that's kind of a good thing. So a lot more institutions maybe are seeing some sort of value with SoFi. So these are all the transactions that have occurred on the secondary market above $100,000. So that's kind of a good thing. Today there was no news, no SEC filings, nothing like that. Goldman Sachs and Morgan Stanley did come out with their earnings, which both were relatively good, especially in comparison to Bank of America and JP Morgan from the previous Friday. So that kind of kicked off some optimism with SoFi, especially looking at pre-market. You saw a very nice spike up to around $8. It does only show right here around 6,000 shares being traded for that. I looked at the tape, I think it was around 15,000 in all honesty, but still, regardless, that was a very weird abnormality that did occur. And a couple of things I just wanted to bring up. So looking at analysts and just what has been happening over the last several weeks, it makes you wonder and question about SoFi and what's truly some institutions' intention. For instance, if you look at a lot of the news, a lot of the articles have been coming out, whether it be from 𝗪𝗧𝗪𝗧𝗛𝗖𝗧, so is SoFi a buy or 𝗪𝗧𝗪𝗧𝗛𝗧, like a lot of them are very bearish for whatever reason, on the verge of their upcoming earnings, which doesn't make sense. This is going to be their first profitable quarter, fingers crossed. But once again, why are all these negative articles coming out? And I normally don't like to think like this. I don't like to think like AMC, like, oh, the world's against us, like all that kind of crap, because SoFi is completely different, right? Like AMC is a pure meme stock. SoFi is an actual credible company. But going down the rabbit hole a little bit, a lot of these actual, I guess, 𝗪𝗧𝗪𝗧𝗪𝗧𝗪𝗧𝗪𝗧, Bazinga, so a lot of these institutions technically are subsidiaries of bigger money. And that's what obviously has come out from a lot of research and whatever else. So technically the same people that are writing ratings against SoFi, so a lot of the big money, potentially has a financial interest in causing FUD out there. And at the same time, shorts are very much just waiting to pounce. And so over the last several days, I have been bringing up the fact that, or I guess trading days, that shorts have been very timid with SoFi in comparison to a lot of other growth stocks. As I've said, throughout the last several weeks, growth stocks have been hammered by shorts, whereas SoFi, like oddly, has been hit and miss every single day. Today, they did bring the hammer, so they increased about 2 million shares today, which was pretty significant, but 13.79% of the free float is being shorted. 123.44 million shares overall are being shorted. Cost to borrow average is 0.8. And right now, through Interactive Broker short availability, does indicate more than 10 million shares is available to be shorted. So this is all interesting, especially if you piece it all together, the kind of increase in negative articles on the verge of their Q4 earnings and annual earnings, short starting to double down, just some very abnormal, out of the blue negative ratings, as I've brought up in the past. But in case you do not know, these are the latest analyst ratings for SoFi once it does pop up. So a couple okay ones. So Bank of Montreal, Barclays, Deutsche, they came in line with somewhat expectation. But for instance, like Compass Point, KBW, Wedbush, like a lot of those have been just out of the blue and extremely negative. And the market seems to react very much negatively, more negatively towards that, and brush under the rug any positive ratings. So again, not to go down the rabbit hole, but something seems to be afoot. But there has been one thing that I've been saying since I started to cover SoFi a long time ago. SoFi is trying to be an innovative company in one of the oldest sectors. It is not going to be an easy task. So this is why you do see a lot of volatility. You see as well at the same time, a lot of institutions and bigger money pretty much trying to destroy SoFi's technicals, as unfortunate as that is. And also on a side note, I'm actually reading a book on advanced kind of strategies on technicals, on charting and everything else like that, which is very, very interesting. But there was one section even in that book that it does say, coming from an insider or a position of stature, or like a big money essentially, what you can do to manipulate retail. And retail does own a very good chunk of SoFi. So this is the current ownership. So you see, based on, I guess, the last round of 13Fs. So it does show institutions being 373.82 million, strategic entities 37 million, and then other, which AKA that is retail. So majority of SoFi's float is held by retail. So once again, big money likes to manipulate any form of retail. But also on a side note, I guess I'm kind of going down Pandora's box or down the rabbit hole with that. Just obviously the moral of the story is it's going to be a lot of volatility in SoFi's future. Just kind of be very aware of that. But anyways, moving on though, looking at options activity. So $4.86 million in calls being purchased versus 3.6 million in puts being done today. Sentiment wise, 47% of all the options being done today were optimistic. Of the call options that were purchased, there's a consensus for it to be above $8 by the end of next week, or sorry, by the end of this week. And looking at puts, it is anticipated for it to be sub 750. So more of a continuation of that downtrend. And so far right now, as crazy as that sounds, but the technicals, or I guess the Elliott wave, has been showing very accurate. And so based on Interactive Brokers, it does show through the Elliott wave that it might be going anywhere from 582 to 640. In SoFi's case, I guess it does seem to be kind of extreme, but in almost every other growth stock, the Elliott wave technicals have been almost 100% on point. So I don't know if this is realistic. What's your thoughts on this? Do you think it's going to go from the high fives to the low sixes, like within that range? Or do you think it's going to go higher? What's your thoughts on that? Based on some support and resistance points, with it closing at 772, it is trading between this S2 and this S1. So 794 is going to be that next strong resistance point. Vice versa, 715 is going to be that next strong resistance. And as I said on my video over the weekend on some expectations for this upcoming week, retail sales, that is coming out tomorrow. That one will be a very big disruptor in the broader market, and if positive, then you could see some upside coming. So let me know your thoughts on that in the comments below. I just wanted to quickly play this video, only about a minute and a bit from this, but it does talk on short-term risks in banks and how it's potentially pointing downwards. So keep in mind, SoFi is getting dragged down because it's considered a bank, despite the tech aspect to it and despite the huge amount of growth that it's having compared to brick and mortar banks. So take this with a grain of salt, but then again, I still feel like a lot of people will get some value of this just to kind of think about what is truly happening in the broader market.
Vance, as we see the second week of bank earnings, what are you looking for, and what did you make of what we saw last week?
So particularly with the big banks, Morgan Stanley and Goldman Sachs, we're really looking at what they have to say about the environment for deals going forward. One of the things we heard last week from JP Morgan was, in fact, some optimism on deal flow picking up. And we know that deal flow was very bad last year. We know the numbers from the third quarter down in the mid 20% rate. But what we've started to see is an improvement on the M&A front, particularly in healthcare and some of the energy areas. And we think it's likely that we'll hear some optimism about that, and perhaps even some optimism on the IPO front going forward. That would be very good for these stocks, as that's an excellent business for them. In addition, from Goldman, we want to hear what they have to say about their consumer business, where they've made, as you said, a lot of missteps, and we need to hear how they're getting out of those businesses.
You know, you mentioned their consumer business. One key metric, of course, is net interest income. What are your expectations when it comes to that? And as you mentioned, the consumer business, Bank of America, their net interest income came in probably better than some people expected, obviously a big consumer bank. What do you make of that?
Well, the consumer right now is pretty good, and the banks certainly are not having as many issues with their mix between deposits, assets, and liabilities as they were earlier in the year. We've seen that improve sequentially, even though it's still negative. However, we are concerned with all the banks that the expectations for 2024 might be ahead of themselves for when net interest income is going to bottom. We're particularly concerned on the regional bank side as they seem to be a little more aggressive with expecting rate cuts and expecting that net interest income to turn around sooner. We think it will continue to improve modestly, but it's probably a second half of the year as opposed to a first half of the year phenomena.
So yeah, there you have it. So ultimately, a lot of that mentality is affecting brick and mortar banks, just the financials. And through that extension, this is how SoFi is getting dragged into it, even though it doesn't fully meet all of the same fear criteria, if that makes sense. But regardless, as I already said, SoFi is going to be a long haul investment. So just practice your due diligence, be patient. Keep in mind though, I'm not a financial advisor. So with all that, I appreciate all of you watching. Don't forget to hit that thumbs up and subscribe. And with that said, I appreciate all of you watching.